New Holdings just released their latest quarterly figures. The stock is down over 8% at the time of making this video. Now, you know me, I love New as a company, great management. I do not own a position anymore in New. It's been a while. I've put it all in Mercado Libre. Of course, I'll do a Mercado Libre earnings review pretty soon. But what has happened with New? Well, New has faced a lot of FX headwinds for the quarter. Quite a lot. I mean, remember when we talked about the company when it was closer to $10? That wasn't that long ago, right? It was at the end of 2024. Lots of political issues in Brazil, etc., that have impacted the company, or not the company, the stock, impacted the stock quite a lot. Since then, of course, the stock did rally over 30%. Now we're down 8.3% after hours, which still means that the stock went up over 20% since that bottom. Now, is the growth story over? Is this a buy the dip opportunity? You know what I think. I think this will be a buy the dip opportunity. Not for me, for those holding New and for those that are always interested in opening a position in New. I think this will represent yet another great buy the dip opportunity because this is a company that is still growing extremely quickly. And if you think, oh, but look at market cap, it's already quite big. It is big, but successful companies usually get much, much bigger. And I'll talk about how they can become much, much bigger later in this video because they did touch a little bit on that as well. Now you might say, oh, but they're going to expand now outside of their core markets. That's maybe risky, etc., etc. Chill. We'll cover all of this in this video. If you enjoy this type of videos, hit all the buttons. We really appreciate that. I already covered Celsius, Alibaba today. So if you missed those videos, those will be in the top right corner. And if you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So as you can see, this is a little overview by Stock Market Nerd on X. Brad is an amazing follow, great guy, great investor as well. So as you can see, lots of misses for the quarter, massive FX headwinds. Now, this is what David Velez said for the quarter and for 2024. 2024 was a transformable year for New as we advance our mission to empower millions across Latin America with accessible, transparent, and low-cost financial services. We closed the year with over 114 million customers, adding more than 20 million new customers while strengthening engagement and deepening primary banking relationships. In Brazil, we consolidated our position as the third largest financial institution by number of customers, while in Mexico, we surpassed 10 million customers, reinforcing our strong growth momentum in the country. Deposits surged 55% year over year, FX neutral, to $28.9 billion, supporting the expansion of our lending portfolio under disciplined risk management. We're going to talk about those loans and those NPLs later in this video. Revenue grew 58% year over year on FX neutral basis, while net income reached $1.972 billion in 2024, leading to an annualized return on equity of 28%. Very, very good. If you don't know, ROE of 28% is incredible, placing us amongst the most profitable financial institutions globally, even while maintaining a significant excess capital position. As we further scale our money platform, drive innovation, and expand financial inclusion, New is well positioned for sustainable growth and long-term value creation, which is why you are seeing this. This is just incredible from the company. I mean, throughout the last couple of years, this thing has grown extremely quickly, remains profitable, actually remains quite attractive from a pricing metric as well. I think forward P was in the 20s or so, mid 20s, so definitely not on the expensive side, especially not for the rate that they're growing. Here you can see each and every quarter. Yes, it's true that growth rates year over year has come down a little bit, but still growing at 50% year over year. Q4, that's still great. Gross profit with a margin of 46%. Net income continues to go up. Adjusted net income also continues to go up. So all great for the company. As for the customers, yes, it's true that quarter over quarter we have come down a little bit for the activity rate, but all in all they added 20 million new customers year over year, and yet the activity rate stayed the same. Usually what you're seeing with a lot of other companies is that, oh, they're adding a lot of customers, but the activity rate is going to drop. Here, as you can see, no, there are more and more customers on the platform, and more of those customers are engaging with multiple products, which is what we're seeing here in the cohorts, number of products per active customers. You see, Usually, well, previously what we had in Q1 2017, even 2018, is new members started off with one product, maybe two products. Now we can see that new members are already starting with 3 products and getting to 4 much, much quicker than before. And that's the thing here with new, right? As they expand, as they attract more and more people to their platform. Because yeah, they've grown quite quickly throughout the last couple of years. You might think they're reaching a top or a ceiling, but no, Latin America is very, very large, very, very big, plenty of people there to still attract and join the platform. And then of course, it's up to them to continue, up to new to continue with what they're doing right now, is make sure that each new customer on the platform doesn't just stick with one product, but starts to adopt multiple products from the start and continue their life journey with new. And this, in my opinion, is exactly what we're going to see. Looking at net interest income and net interest margin, we can see 2 things here. One, net interest income expansion driven by growth in interest earnings portfolio. We are seeing that net interest margin did come down a little bit. Again, some headwinds in some of these locations that they're operating in. They are trying to grow and grow quite aggressively. They're taking also a little bit more risk across the portfolio, but all in all, you will see it's worth it. It's worth it. Cost to serve per customer is still one of the lowest ones out there, despite them growing more and more. This is also incredible. Then gross profit, as we've seen, up 44% year over year, continues to go up. Gross profit margin 45.6%, so all good there. And this is all despite FX headwinds. Now, remember the issue with regards to delinquency ratios, right? We've seen 15 to 90 days NPLs. We've seen that peak here at 5% a couple of quarters ago, and then that has come down. Okay, fine. The issue was, of course, that if you look at the 90 plus NPLs, that one has gone up and up and up and up and up. And of course, last quarter, as you can see right now, it seems that 7.2% was the peak, and now that has come down. Remember what management told us in the last, 2-3 quarters or so? It's very simple. What we see here, 15 to 90 days NPLs, right? What happens afterwards? Why are we seeing this drop? Well, we're seeing this drop because after 90 days, they start to join this side right here. And this side right here does not have another category. So they will keep staying here. But if we go back a couple of quarters, this is what they're saying, right? If you go back a couple of quarters, look at 15 to 90 NPLs, you can see that it started to drop here. What was it? Q1 2024, and then it started to drop. They said, look at what's happened before. We are expecting about the same that should be happening at the 90 plus NPLs, and it does seem like management knows what they're talking about. So yes, usually what happens is this group right here on the left, after 90 days, starts to join the group on the right, and the group on the right does not have another group to join. So if you keep having those 90 plus days, you're going to stay in that group. But of course, they knew this, they explained what was going to happen, and well, this is exactly how it's playing out. And then the big slide, it's one that an analyst kept on asking during the earnings call. So we've got here 3 acts. Act 1, building the largest and most loved retail banking franchise in Latin America. Act 2, expand beyond financial services. Act 3, a global AI-driven digital banking model, with an emphasis here on global. Now, the analyst basically said, look, it's great to have these types of plans, but why not focus on the markets where you're at right now to continue to gain more and more market share, because you're still just a tiny fraction. I think he said something about 4% of the overall revenue in those regions. So imagine what happens when they take more and more the impact on the business. And he continued by saying, expanding globally, etc., might be more risky. Why not focus on the most important markets right now? And what about expenses, etc. And the management said the following: look, good question. We know this. The majority of our attention is still going towards our core markets today. A part of our group, of our employees, are working on products that are currently not really generating much revenue for us, much profit for us either, but those things are going to be quite important for the future. As for expansion, same thing. The majority working on our core markets, the rest are starting to work on other markets, which As an investor, this is exactly what you want to hear, right? This is smart expansion, smart business as well. You know that your core market, you're still quite early in those, but you also have some greater goals, which is to grow globally. And so you can work on both of them. Not everybody can do this, right? Not every company can do this. We've seen plenty of companies that think, oh, we've got momentum, so now it's time to start expanding in other multiple markets outside of our core area, right? And then in a lot of cases, what we are seeing is that that fails. Me personally, I've been following you for quite a long time. I think management knows what they're doing. And so right now, what we're seeing that the stock is down under the 200, the 50, and the 20-day moving average. But we've seen that previously, right? Previously, we've seen that as well. But it did respect the uptrend line that started basically back here in January 2023. So quite a long time ago, which is crazy to say. So we'll see what happens. I mean, if it can go back like closer to that $10 mark, $11 mark, I think we're going to see quite a lot of buying action. And maybe, who knows, maybe even on Friday, we might see this recover throughout the day, because all in all, this is still an amazing company. Not really that expensive, all things considered. Okay, some FX headwinds, fine. We knew this was going to happen. So if you're looking for a dip, I think the dip is going to get bought quite quickly with this one. So all in all, that's about it for me in this video. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I see you all in the next one. Bye-bye.